What's up, everybody? We made it to Friday. Hope you guys are all having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Everybody had a great trading day yesterday as we saw what I thought was going to be a bit of a down day yesterday turn into a bit of a rally, and then we kind of jumped around a little bit, but really, I call it full of sound and fury, signifying nothing because we didn't do a whole heck of a lot when it's all said and done. So. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell, all that fun jazz. If you're here and you're watching live, throw a little like in there. We really appreciate that whenever you can. Takes you half a second. Hey, real quick, want to make a real quick announcement. I talked about this yesterday in the live trade room. We are doing our online traders summit. So we're doing our next traders summit Thursday, October 15th. So Thursday, October 15th, go to tradersarmy.com/tradersummit to register. Totally free. It's not a sales pitch. I know a lot of people come to these events and they think they're going to be nothing but a sales pitch all day. That is not the case. It's purely fun and educational. And we've got some, myself and Corey, we're going to talk about trading the open and trading the open in the morning. Justin Krebs is going to talk about the difference between forex and forex futures for those of you that are forex traders. We have the champ, Steve Champa, who's gonna talk about how to get that winning edge. He's actually one of my first trading instructors. One of the first people I ever sat in a classroom with. I guess my head's in the way. Thanks for that. Sorry. There we go. So like I said, we got myself, Corey, and Justin. Steve Champa, one of the first instructors I've ever worked with. Both Dan Hodgman and John Hoagland from Top Step Trader, they're going to talk about risk management in your own account. And for those of you that are Top Step members, what does the risk management look like inside of their account? What's kind of interesting is that the Top Step rules are pretty strong about how to kind of protect it. So, and then John Rowland from barchart.com, a lot of you guys may know John. He is going to talk about energy futures and how to trade crude oil, nat gas. He's got a really, really strong background from the floor trading that. And then we're also going to have Mr. Mickey Moores, who's a long-term options expert. So he's going to talk about how do I do long-term hedge options, especially when we're in an unknown market. So Thursday, October 15th, register, get that on your calendar so it is good to go. All right, I'm going to go ahead and get started. All right, so on our ES this morning, Joe says the 15-minute zone got hit, went 1 to 4, and then came back right quick. You're totally right, Joe. That's exactly what happened. It did a quick 4 to 1 off of yesterday's 15-minute level. Let me go to a 15-minute chart. It was one of those ones that it was a quick hit the level, strong move away, and then boom, pop right back up. Now, the other level that we looked at yesterday was this gap area, which wasn't really a gap. If you guys have Thinkorswim, we after it was Carl and Arlene who did the due diligence and found that there was 30 minutes of no data being reported, which is what made it look like there was a gap. So that wasn't really truly a gap. Market came hammering right through that area. But if I go back to our little 15-minute level, that level actually, old resistance oftentimes becomes new support, and we consider that a bit of a flip zone. So that level then flipped later in the morning and became a really, really strong move away. So that was a pretty good move away. Liz, those white candles are difficult to read. They become a little bit more painful. So what are we looking at for today? Well, my thought in looking at the markets yesterday, and the reason that I wasn't bought in with this rally we had on a daily chart, and I'll pull it up on the spiders. And I said this, we had 2 days of a decent rally before Wednesday's strong pullback. And I wasn't really bought into those 2 days of a decent rally because of volume. There wasn't enough volume follow through on those 2 rally days. Notice our lowest volume day was also that fairly large up day. And so with that increase in price, but the decrease in volume, my feeling was that there wasn't going to be a strong follow through. And so, yeah, I would agree with that, Nathaniel. I think that we've got a good chance for a breakdown on the daily and for price to continue to sell off. And I've said this a couple of days ago, and I'm going to continue to say it. I think that we're going to need to see the big four, Apple, Facebook, Microsoft, Google, and Amazon come down to their respective areas of demand before we're going to see the market give us a rally. And I don't know for certain that we're definitely going to rally off there, because certainly all those demands could also fail. But I'm very suspect of an equity market rallying when my four major stocks in that equity market are not in demand. It makes it very difficult for me to consider taking it along on those positions if we're not in an area of demand where I think price can move. So, yeah, Dennis, still a little daily demand that needs to be taken out, but overall, I think the chances are more likely that we see price continue to move down, and so I'm trading that way. Haven't really changed my overall bias. Now, we looked at this level yesterday. I think it was Joe who talked about this level yesterday for a swing trading opportunity, and we came close to it yesterday in the afternoon. Missed it by about 5 points, and we were unable to get into that position. And so now, what am I looking at for a reversal this morning? Well, as we rally up on a 15-minute chart, we are coming into an area of supply right here that is fairly clean just in terms of an overall pivot. Yeah, I would agree with that, Dennis. Orders are being absorbed. And so I like levels like this where they're 3-4 points wide on a 15-minute chart that are still going with the big picture trend, right? My big picture trend is still down, and that's still going with the big picture trend. Now, I will say this. My big picture trend is definitely slowing of momentum a bit. If I throw my MACD in there, we will see that although I have lower swing lows, I have higher swing lows in my momentum indicator, right? So I'm definitely seeing a slowing of momentum inside of this move down. But by the way, we saw a slowing of momentum here as well, right? And it led to a rally for a Monday, a Tuesday, and then we sold off Wednesday, Thursday, Friday, right? And so we've seen that for a while that's a potential. And so I think I'm still going to continue with the downward trend, but my momentum is definitely slowing. For those of you that trade the RSI, our RSI is still not to an oversold territory. It's still not to an oversold territory for those of you that trade in that RSI position. If you use that 60-40 RSI, which kind of changes it a bit, we're still not even to below the 40. The idea being is that RSI is not going to come up above 60 on a strong downtrend, and it's not going to come below 40 on a strong uptrend. So you just kind of take those two lines and squish them in a bit. And so when I'm looking at what we have now, everything to me says, yeah, Ryan, I agree, 100%. Definitely some divergence that we're seeing. No doubt are we seeing divergence, but we're not at a point where I think that we are going to completely slow down. Right? We're not at a point where I think we're going to completely slow down and stop the move. And so looking at this 15-minute chart, I think that this gives you a good opportunity to enter with low exposure, low risk. I mean, your stop should be probably about 32.44 at the tightest, 32.44 half. So 5 points worth of risk. So on one contract, that's $250. On a micro, that's $25. So this I think is a really, really decent opportunity where you have one of those low risk, high potential reward scenarios. Timing is okay, Joe. I'm actually all right with that time of the day in the Globex. 4 a.m. Central in the Globex is actually all right with that. What I really want to avoid is those 7 p.m., 8 p.m. time of days. 4 a.m. is actually not terrible. I used to actually look for a 4 a.m. reversal as one of my more common times of the day. So I'm okay with a 4 a.m. position on 4 a.m. Central. All right, NASDAQ. NASDAQ yesterday, same basic picture. We'd had that 15-minute level. Now, the NASDAQ didn't give us a 3 or 4 to 1 move away from it. It kind of just poked down from there, but I still believe that we've got a better chance of price coming down. Now, we looked yesterday at the breakout on this 15-minute. and we were looking at the basing, and the basing came down, and we didn't get the basing. So we were in class when it happened, and we thought that the better retest was going to be up here, and we did get a little move, and then it just popped right through. It just yesterday's bearish just didn't hold on. So just didn't give us any reason to stay short. Now, when I look at the NASDAQ and I look at my potential areas of supply in the NASDAQ, none of them are as clean. None of my potential supply areas in the NASDAQ are as clean as my demand, or as it is in the S&P. We have this little one up here, which is formed at about midnight, but that same 4 a.m. level, we've already eclipsed it in the NASDAQ. So the NASDAQ's already eclipsed that 4 a.m. level that we just looked at in the S&P, and so that makes me a little bit more cautious of the S&P zone, but none of these supply levels are clean enough in the NASDAQ for me to be interested in taking. None of them. Now, when we come up a bit higher, we may have one that pops out as a potential, but we're looking way up here. And that actually shows up on the hourly chart up there. All right, Russell. So looking at the rut. On the rut yesterday, same picture as we had with our other markets. The downward move didn't continue. But when we look at our bearishness, this is the market that on an hourly chart, here's my cleanest short. Right there on the hourly chart. I think that's a really clean level and a setup if price comes back into that region on that hourly time frame. What does that look like on a 15-minute? It's that same pivot that we just looked at. So I think that is actually a pretty clean level on the 15-minute. On this one, you do have another fairly good level right here that's just in front of it that we're closing in on now. But I like the one up here a bit better. And remember, I look at it on the 1 hour chart. And on the 1 hour chart, I think you're fairly clean. You do have this little level up here as well, which is just below the hourly pivot. So if you want to be more conservative, if you want to be the more conservative entry might be just to take this one up in here. My only issue with that is this long wick on the 15. That it's not quite as clean. So I like the hourly level right there, 1449 by 1452. Once again, if that level's too wide for you, or if you're not willing to take the risk, what's a way that you can dip your toe in the water, and then if it starts to go your way, add to your position, right? What's a way that we can do that? Where we can dip our toe in the water, and if it starts going our way, we can add to the position. That would come in the use of micros, right? We can use micros to do that. Yeah. I mean, I can get in with 1 or 2 micro contracts, and then if it starts to go my way, I can add more micro contracts. That's a very valid trade management way to get in to kind of step your way into that position. Stop above the pivot high. So Trent, on this one, let's go to the 15-minute. On this one, I'm okay because your leg in candle is right here. I'm okay if you keep the stop really, really, really tight. I'd actually prefer this one to be a really, really tight stop, only because of my divergence that's telling me that we could resume a little bit more bullish. So on both my Russell and my S&P trade today, I'd prefer a tighter stop than usual, just due to the momentum shift that we're seeing from the bearish to the bullish side. All right, let me share this grid here right quick. All right, now let's move over to commodities. As yesterday, our crude oil level still wasn't been hit. We are still in between. We've been now, it's what, 4 days that we haven't looked at a level in crude because we've been in between areas of supply and demand. Now, I will say that overnight we had a pretty big move down, which may give you a setup in crude up here, possibly even this one here. This one's a little bit more towards the middle. This one's here a little closer to your pivot. Looking at the 1 hour, on the 1 hour chart, the one that's up here is probably a bit better. being a little bit closer to the pivot, it also sets up for a better reversal. So I think that's okay inside of this bigger picture 4-hour sideways price action. I think that the next leg is actually probably going to continue to head down, because when I look at this 4-hour, I think there's a chance that we retest this area down here. So we may not even make it up to this level up here. I mean, this is still, what is that, 40 ticks away. So we're still 40 ticks away from that level. If you're much more aggressive, you're putting in 2 reversal candlestick patterns right now. If you're a very short-term day trader and you're putting in two very aggressive candlestick reversal patterns, you could also just get short at 39.90 with a stop above 40.03 for a short day trade. If you believe, okay, we're going to roll over and head down further, I'm okay with that if you're willing to take that risk. I think that that's a very valid way to utilize the candlesticks and to take a minimal exposure position where you've got a small amount of risk relative to the reward that it can make, especially if on the 4-hour, especially if we're able to make it down to here, right? If we can make it down to 39.40 on our 15-minute chart, you're essentially risking 10 to make, you're essentially risking, what is that, 39.90, so 14 pips to make 50. That's a pretty good reward to risk setup. So if you're more aggressive, that's a crude oil trade that you can do today on an intraday. I don't normally do candle to candle style on 15-minute charts, so it's definitely a more aggressive entry type. I know some of you out there still look at 5-minute charts. I don't go as low as 5 minutes, but but this is almost a trade that you're really looking for that small time frame entry. All right, gold. Looking at gold yesterday. Well, I guess it was Wednesday. On our Wednesday's market, we had, for those of you that joined us Wednesday, we had a really good short off of this level. Yesterday in our live trade room, we kept the level. We just moved it to a confirmation entry because the level's not dead. The level's still very valid, frankly. It's just has to be a confirmation if we return back to it. So now, looking a bit higher, I'm going to come to this region up here for a potential reversal. Yeah, the dollar has been strong the last few days. That's definitely got a lot to do with it, Dennis. I would 100% agree with that. Okay. So there's our CL and GC levels. Taking a look at Nat Gas. So Nat Gas, yesterday we continued our rally up as it cut through pretty much all of our supply levels that we had in place on that humongous rally. We had our Nat Gas announcement yesterday. Our storage numbers came out. And so looking at this, man, we're still on the X contract here for... all right, we're still on the V contracts. Which is somewhat surprising. So I'm going to look at... Nice, Liz. I love to hear that. All right. Yeah, I know it's on the X, but for some reason, if you look up here, Dennis, when I just do /NG, Thinkorswim is still using the October contract. Right? Whereas if I do NGX20, it moves me to the November contract. So let's look at the November contract on this one, going contract specific. Yeah, it's now, I will say this also, though, by the way. I mean, when I go to the, as long as you're not there for the actual rollover, right? So the V contract, my spread is 1 or 2 ticks. The X, my spread is 1 tick. So your spreads aren't all that much different, and you're definitely going to get a better trade on the X contract. So I'm a little bit I'm really not. Yeah, it's usually early on most contracts. So I'm really wondering why they haven't switched over yet. So looking at the 4-hour on this, My trend is up, but this is what we call price shock. For those of you that are familiar with the term price shock, it's a strong directional candle, the opposite color of the predominant trend, and that would be very strong price shock, which is oftentimes going to be a strong indicator that our big picture trend's about to reverse. And so, if that is the case, on a 15-minute, you get a little rally back up to this wick over wick, it might be worth trying a quick short. That's 2.839 by 2.849. All right. Copper. So copper yesterday came right into our supply level. So we had two supply levels yesterday there in copper. So the first level we hit, we got a little move away for about a 2-to-1, and then it kind of came back through. The second level for copper hit, and we've gotten a really strong move away from that area. So both of those levels in copper gave us a decent little move away. The second one, obviously, much better than the first. And on our 4-hour trend, we have a clear 4-hour downtrend, right? Very clear 4-hour downward trend. That could be the issue. I don't know. I haven't emailed him. I mean, I guess I could just email him and ask the question, but I can just bear with it. When I look at copper on a 15-minute chart, while I normally would like this level, what's my problem with this level? What's my issue with this zone? Because there is a small issue that reduces the quality and the probability of this level from an optimal zone. Yeah, it's been tested. And when I say it's been tested, I'm talking about this green candle right here. This green candle that wicked up into here traded more than halfway into the zone, which removes the freshness of that level. Is it still a potential sell area? Absolutely, but I'm going to remove it at this point. I'm going to remove it at this point and let that thing go. And as I look at this for today, I've got, I don't really see a quality supply zone. I would be interested to see if we get some basing below here to trade kind of the next leg down. Because of all this noise that we have over here to the left, this could actually work for a breakdown. Yeah, the only way we can do it, Dennis, is confirmation. That's 100% for sure. Soy, we looked at soy yesterday. We unfortunately did not make it back to our little supply level in soy. Pretty good zone on the smaller time frame. Didn't quite make it back. Didn't really move a whole heck of a lot yesterday either. And so if we come back up to this pivot, you may get a little reversal on this pivot. Corn looks pretty similar, although corn has made it back to the pivot area and started its move away. So those of you that took the corn trade, you've pulled out a little bit of move, about a 1.5-to-1 from that position at this point. You can, I would say at the very least, move your stop to break even. Take a little profit off the table. It's nice to make a little bit of coin on corn. And now, if price continues to head down, looking at the 4-hour, I'm looking at this for a potential breakdown right through here. Yeah, very good, Liz. That's exactly where I was drawing it. So, okay. So those are our commodity markets. Let me share this grid as well. All right. Now, yesterday, we looked at our currencies. Now, all of our currencies yesterday, we looked at a potential weakness in those currencies. And I'm going to move this from the ZN to the 6N, the New Zealand dollar, because we're just not getting anything in bonds, and this doesn't even make sense to talk about it. So I'm going to start with the New Zealand dollar today, because the bonds there's just nothing happening in bonds. Now, all of our currencies, we were looking at price continuing to the downside because we saw that strength in the dollar, and then we got the move back up. Now, this one came close to our supply zone. So upon coming close to our supply zone, what does that do to the level? What switches it to a confirmation trade? We then come into the level without getting halfway, and then we violate the zone. So this one didn't really give us an entry on the New Zealand dollar. The better level still exists up above. Hasn't changed my big picture trend direction in any way, right? And so when I go to the smaller time period, if you look for an entry on the smaller time period, here's your entry on the 15-minute chart. It's a 50% retracement of this most recent move down. So I think that sets up for a pretty clean little buy area. Sell area if price comes back into there. I'm not changing my big picture trend direction. The Aussie as well, we had this little level in here where price came and we got a little touch and go off of that zone. Depending on where your lines were drawn, you may or may not have gotten filled. The level worked for about a 3-to-1, and then it just came hammering back up. Well, on a 4-hour, did it change my overall trend direction? Not one iota. My overall trend direction is still down. So if you want to try to jump in and rejoin this trend, I would say your breakout below here is good. Breakout below this region, or a reversal back up to here. Now, this is one that I could see us gapping on Sunday and getting to one of these levels. I could see a gap on Sunday getting to one of these levels. Remember, it's a Friday, so if you're going to play something over the weekend, understand that you're going to want to hedge it utilizing options as a way to hedge those positions. Okay? Next is our euro. We talked about the euro is going to continue to go down. Back on Wednesday, we talked about that candle-to-candle level. Price didn't get all the way back up to that candle-to-candle level. And then yesterday in our 15-minute, we looked at this little zone right here. Price came into it and gave us a move away. But what did we think about this, about what price was doing as it approached the level? Somebody give me an adjective to describe this price action. Give me an adjective to describe this price action before entering the level. Basing is a good adjective. We were definitely doing a lot of sideways chopping. I use one for those of you that haven't heard. Chop and slop. That's good. I use the term thorny when I see a level like that. When I see a level like that, I use the term thorny, and the reason I use the term thorny is because when I think about a market that looks like that, it makes me think about reaching into a bush to go pick blackberries, right? When I was a kid, we had raspberries all over Pennsylvania, and we would go picking raspberries. And there were some times where you would just look in and there'd be this beautiful, golden, luscious raspberry. But the problem is that beautiful, golden, luscious raspberry was surrounded by that, right? Or that. And then you got to ask yourself, do I really want that raspberry? Like, is it worth the blood to reach in and get that raspberry, right? And so when I think of a level like this, I will tell you, for me, it got too thorny before heading into the zone. I don't like seeing exposed wicks like that, because exposed wicks like that tell me that there's just not a whole lot of decisiveness in the position, and we're not closing on or near any of the highs or lows. We're closing off of the highs or lows, which tells me that there could be some changes that I'm not as interested in. Okay? Jose, I already did that one, man. Did you miss it? I did it first today just for you, but I'll review it again for you. So it did work for a little move, about a 2-to-1, but then it just kind of fell apart. Well, did it change my big picture trend direction? No, my big picture trend direction didn't change. Matter of fact, we're still heading down. And so I'm still going to want to look for quality areas and opportunity to get short. Now, we do have a demand level below us. Let's look at that 4-hour demand. We've got a 4-hour demand level below us right in here that we're not quite there yet, which makes a breakout trade pretty weak. I would normally look for a breakout. Below this area, but unfortunately, without having room to roam, a breakout doesn't make much sense. Okay? So if we bounce off of that demand, I might look for a reversal area up in here. Specifically, That one right there. All right, Canadian dollar. So the Canadian dollar, this 15-minute level, this little tiny one that we had looked at yesterday, this is another one that gave us a touch, and then we broke all the way down. It was one of those touch and go, good for about a 2-to-1 or 3-to-1 reward to risk. And then, boom, popped right back up. Now, it then reversed right back down. And so the level itself technically worked for a bit of a reversal, but was unable to continue that downward move. Has it changed our big picture trend direction? No, it has not. Our 4-hour chart, still strong downward trend. Yeah, that's a possibility as well, Amit. I think that's a very strong possibility. When I look at this Canadian dollar, we are approaching 1-hour demand, Joe, but that 1-hour demand is, I think, still going against the big picture trend. And when I look at this, I really look at this demand way down here as my next best stopping point from the 4-hour perspective. I could even go out to, say, the daily chart, and this is all just sloppy mess on the daily chart, so I would think that price has a better chance to keep falling. So I like, a reversal on supply a bit better. Little bit concerned that the one we found yesterday only worked for a quick 2-to-1 and then failed on the second run. But that would be the level for a potential reversal. Great British Pound. So the pound yesterday, we had looked at a potential for a breakdown or a potential for a breakout to the upside, provided that we get the basing. Now, I originally didn't look at the upside breakout. Joe pointed this out to me yesterday, which was nice of you, man, and it made me think differently. And I really looked back at all this area over here and then this over here, and that made me say, you know what, that could be an upside breakout. And it actually served as resistance once. And then our potential breakdown, we didn't get basing, so that breakdown never gave us an entry. And then the next time we came up to here, we didn't get basing, and so we never got an entry. I mean, it just didn't give us anything one way or the other. So all of those breakouts is really just, hey, we're going sideways. That's really all it was. All of those breakouts was just, hey, we're going sideways. And I think, we talked yesterday about this could be a bit of an indecisiveness heading into talking about Brexit. Joe, you could go candle to candle on this because of this reversal. If you believe that price going to head down, I think it's best on this to just kind of sit tight with all that 4-hour sideways price action. I'm just not going to do anything with it, Joe. I'm gonna let this one be for the day and just let it rest, let it marinate a little bit, and let's see what happens over the weekend. Japanese yen, we're sitting above a potential breakdown in the yen. If we get, actually, we got a decent little bit of basing in here. I'm okay with the yen. We're right at an area that could be a decent breakdown. If you're not comfortable with the breakdown, you can wait until we retest this line right here on a 15-minute chart. But I'm actually okay with a breakdown trade on this level here, especially if we get a little kick up higher and then price coming down from there. All right. So that New Zealand dollar, Jose, I talked a little bit about it earlier. We showed the 15-minute level, which worked for a quick one yesterday, and then it came back in the second time. And oh no, sorry, it didn't work for a quick one. I'm sorry, it was this one here, and it was a little sideways, so it converted the trade to a confirmation. That's what it was. So it didn't give you an entry. You're now up here as your next supply. We identified this additional 15-minute supply right here because our big picture trend hasn't changed any direction. Phew. Okay, let me share this grid. If I could ask you all to do me a favor, I got about 50 of you watching live. Do me a favor, hit that little like button, hit that thumbs up thing. It helps a lot. And then if you've got any comments to leave, certainly leave them in the comment section of the video. The more comments we get, the better. Apparently the YouTube computers really like those comment things. So the more we can do on that, the better. Before I leave, we had told you earlier about the upcoming October 15th Trader Summit. So real quick reminder for those of you that weren't with us at the start of class today, October 15th, full all day Trader Summit. Some really, really good traders going to be there. Totally an educational event. It is not a sales pitch. I repeat, it is not a sales pitch. I know that sometimes you go to these shows and they're mostly just pitching. And myself, Corey, Justin Krebs, Steve Champa, Dan Hodgman, John Hoagland, John Rowland, and Mickey Moores. And then our agenda is here down below. It is literally a full day, and we end the day by sitting around the table drinking and answering questions. I mean, what can be better than that? We sit around the table with a glass. You pour yourself a glass of bourbon or a scotch or a whiskey or a Coke, whatever it is you drink. I don't judge, bro. And ask any questions that you want to our, I'll call it the esteemed panel of experts. And we go all the way from 8 until 3:15 that day. So it's a full day. It's really, really going to be good. I think you guys will enjoy it and get a lot out of it. So make sure you register. Also, if you would, I'm going to click the link in the chat box. Share this. Oops. Share this link out with others. That would be super helpful. Let me just refresh where we are. I'm going to put the link in the chat box if you guys wouldn't mind sharing this link out so people can get. Yeah, cigars. I will tell you, John, I ain't smoking in my house. My wife won't that won't fly very well in this house. So I'm going to share the link out there. I put it in the chat window. Please, if you'd copy and paste that, put it out to your social media friends, your trader groups, whatever you're part of, that would be awesome. I want to try to get us. We've got room for 1,000 subscribers. So for 1,000 members. So the first 1,000 people are going to get in. Everybody else, sorry about your luck. So make sure you register ahead of time. All right, everybody, I'll talk to you soon. I hope you guys have an amazing weekend. Remember, if you're going to hold a futures position over the weekend, you got to hedge it. Later.